The firm of LMS was dissolved on 31st March 2012, at which date its balance sheet stood as follows. Creditors 2 lakhs, bank loan 5 lakhs, L's loan 10 lakh, then capital of LMS are available. Fixed assets and cash at bank are available. Partners share profits equally. A firm of chartered accountants is retained to realize the assets and distribute the cash after discharging the liabilities. Their fees, which include expense of rupees 1 lakh, is fixed. No loss is expected on realization since fixed assets includes valuable land and building. Realizations are like this: stage 1, 2, 3, 4, 5. 5 lakh, 15 lakh, 15, 30 and 30 lakh. This 5 lakh includes cash and bank balance of this 2 lakhs. The chartered accountant firm has decided to pay off the partners in higher relative capital method. You are required to prepare a statement showing distribution of cash with necessary workings. Let us get started. First, we have to prepare a comprehensive statement where we are going to distribute the cash available under higher relative capital method. Okay, so let's have the structure. So this is going to be the statement showing distribution of cash, and if you want you can write it is under higher relative capital method. And how we should structure the columns: first column, let's have it for particulars. Second one, what is the amount available? Then first we should settle the outsiders, namely the creditors and bankers. Then we should go for partners loan account, and only finally we can go to capitals. Okay, first let us capture whatever the balance due, right? Balance due. Let's ignore this column. What is the creditors amount? It is 2 lakhs 200,000. Then bank loan is 500,000. Then we have L's loan. What is the L's loan? It's 1 million, 10 lakhs. And what about their capitals? It is 15 lakh, 10 lakhs and 5 lakhs. So it's 15 lakhs, 10 lakhs and 5 lakhs. Fine. Now what we should do? We should focus on the collections and we should distribute them to the outsiders first. Now if you read this, we have information: partners are sharing profit equally. A CA firm has been appointed who will do this realization and distribution of cash. They will charge 1 lakh. So this realization expense should be paid first out of the realization. And what is the realization? The first realization is 5 lakhs. And this includes this cash and bank balance. So let's capture that first. First installment, I'll say item B, first installment. And what is the amount that is available? It's 5 lakhs, right? But from this we have to pay liquidator expenses, less liquidator expenses, which is 1 lakh. So what is the amount available? Amount available for distribution is this 5 lakh minus 1 lakh. We have 4 lakhs. Now this 4 lakhs can be distributed to the creditors and bank loan. Both of them are outsiders, so let us distribute it in this ratio itself, that is 2:5. 2 lakh is to 5 lakh, so we are going to distribute it in the ratio of 2:5. So here we say item E, less payment to creditors and repayment to bank in the ratio of 2:5, right? It means this 4 lakh will get paid and the ratio is going to be like this: 4 lakh multiplied by 2 divided by 2 plus 5, which is 7. 2 divided by 7. So this is the amount which is going to get paid, right? And in this case it's going to be 4 lakh multiplied by 5 divided by 2 plus 5, so it is 5 divided by 7. And what is the amount? It is 2,85,714. Okay, so this 4 lakh got paid. Now let's arrive at the balance once again. Balance due, that's going to be for creditors, it's 2 lakh minus 1 lakh 14 something, we have 85,714. For bank loan it's 5 lakh minus this, and we have 2 lakh 14,000. and for others no payments have taken place, so we can simply copy this, right? So whatever is the balance, that continues. Then comes second installment, so I'll say item G, we'll say second installment. And what is the second installment? Let's check what is the amount. It is 15 lakhs. It's on the right hand side. It's this 15 lakhs. So let's capture that here. Probably I'll put a line here, 15 lakhs. Now how we are going to use this 15 lakh? First let us settle off these two outsiders. Okay, so we'll say item H less payment to creditors and bank loan. Now what is the amount we have to pay to bank loan? It's 2,14,285, and the amount we should pay to creditors is 85,714. And if I total this, I will know what is the amount that I should use from this 15 lakh. The sum of these two is 3 lakhs. Okay, so probably I'll put it here. It's 3 lakhs. So this 3 lakh I have to deduct from this 15 lakhs. So let me show that with a minus sign. So this 3 lakhs got to be deducted, and that's what getting paid here. Okay, so item I, the balance due. Again we are going to check the balance due. Let's see, it's 15 lakh minus 3 lakhs, it's 12 lakh, whereas here 85,714.29 plus this, so everything has been paid, and these balances they continue because no payments have started here. Okay, now what is the balance we have? 12 lakhs. Now what we can do with this 12 lakh is we can pay off this else loan. So we'll do that. Item J less repayment of else loan. So we can use minus 10 lakhs, right? So that gets paid. It means again we can arrive at balance due. Okay, balance due is 12 lakh minus 10 lakh, that is 2 lakhs, nothing here, nothing here, and entire 10 lakh has been paid, and these will continue. Okay, 15 lakh, 10 lakhs and 5 lakhs. Now comes the real problem, because we have to pay this 2 lakhs, but there are three partners which with so big obligations. So now what we are going to do, we are going to make use of higher relative capital method. For distributing this 2 lakh, I'm going to open a small worksheet where we will bring in the profit sharing ratio, and we'll see how it is going to look like. So this is the worksheet where I have a column for particulars and for all the three partners. First let's capture what is the balance due, which we can pick up from there. Balance due, I'm going to pick up from here, which is 15 lakhs, 15 lakhs, 10 lakhs and 5 lakhs. And we know the profit sharing ratio, they are sharing their profits equally, so it's going to be 1:1:1. Okay, so item C will enable us to find out what is the capital profit ratio, capital profit sharing ratio. And what we have to do is we have to divide this, right? So we'll say capital profit sharing ratio, which is nothing but A divided by B, 15 lakh by 1 lakh, 10 lakh by 1 lakh and 5 lakh by 1 lakh, and we have to focus on the capital which has the lowest quotient. So 5 lakh has the lowest quotient, 5 lakh is the lowest quotient when you compare with others. So this capital 5 lakh should be considered as base capital. So what we have to do is taking S capital as base, S capital as base, capital of other partners are, so here I'm going to have this 5 lakh, and if this 5 lakh is for 1, what is again for 1? It should also be 5 lakh. And if this 5 lakh is for 1, what is for this 1? And again this is 5 lakh, so we are going to arrive at the excess capital. Excess capital is nothing but item number A minus D which is 15 lakhs minus 5 lakh, it's 10 lakhs. And 15 lakhs, sorry, 10 lakh minus 5 lakh is 5 lakh, and here 5 lakh minus 5 lakh is going to be 0. So can we take a decision now? No, because they are not in profit sharing ratio. So we'll reduce this even further. So item F will again bring in profit sharing ratio, which is 1:1. Then we'll arrive at say capital profit sharing ratio, which is going to be item number E by F, and it's going to be 10 lakh by 1. We have 10 lakh and 5 lakh. So again, this 5 lakh is the lowest quotient. So if 5 lakh is for 1, what should be this one? That should also be 5 lakh, right? So here we write, taking M's capital as base, capital of L should be, right? What is M's capital? It's 5 lakh. So how we are going to do it? If this 5 lakh is for 1, so 5 lakh divided by 1, what is for this one? And it also works out to 5 lakh. So now we can arrive at excess capital. Excess capital, which is nothing but item number E, right? Minus item number H. So let's calculate. It's this 10 lakhs minus 5 lakhs. It's going to be 5 lakh profit, and in this case it's going to be 0. Okay, now who has excess capital? L has excess capital, so this should be paid first. Only then we can move to the other partners. Okay, so what we are going to do now is, there is some excess capital. What is the excess money available? It's 2 lakh. So this 2 lakh should be paid to L first, because he has an excess capital of 5 lakh. So let us do that, right? So I'll say item number L. We know the balance available is 2 lakhs. Let's use it for making payment to L. Less payment to L towards relative higher capital, and that 2 lakh goes. It means this is fully paid off, right? It means now we can arrive at the balance due. What is going to be the balance due? Which is K minus L, and in this case it's going to be 0, right? 2 lakh minus 2 lakh, and only over here 15 lakh minus 2 lakh, it's 13 lakh, and this 10 and 5 continues. Then comes the next payment. I think the third installment comes into picture. What is the third installment? It is again 15 lakhs. So let's capture item N, say third installment. And what is the third installment? It is 15 lakhs. Fine. Now in this 15 lakh, one thing we have to do it immediately. What is that? L has an excess capital of 5 lakh. Out of that, only 2 lakh has been paid. So first let's pay L's relative higher capital to the extent of 3 lakhs. So I'll say item number O, less payment to L towards relative higher capital. And what is the amount? It is 3 lakhs, because 5 lakh, 2 lakh already been paid. And let's capture that. Now let's arrive at what is the balance due. So let's arrive at the balance due. I'll call it as P. Balance due, it's going to be 15 lakh minus 3 lakh. So 12 lakh is due here, and here the due is, say, it works out to 10 lakhs, probably, yes, 13 minus 3, it is 10 lakhs, and here it is same, no payment have been made, 10 lakhs and 5 lakhs. Now the next payment should happen. This 12 lakh got to be distributed. How we are going to distribute this 12 lakh? Let's go and see. Whatever the excess capital of L has been paid, but if you go one step back, already you have understood that both L and M has an excess capital, because as per this step M has an excess capital of 5 lakh and L has an excess capital of 10 lakhs, right? So out of this 10 lakh, 5 lakh has been paid, so still another 5 lakh is pending, and for him also 5 lakh is pending. So let us pay the 5 lakh for L and 5 lakh for M. So let's do that. So I'll call it as item Q, less payment to L and M towards excess capital. Okay, and how much we are going to pay? Here it's going to be this 5 lakhs and here it's going to be 5 lakhs. So it's basically this 5 and 5, this 10 lakh is getting paid. Okay, now what is happening? All the excess capitals have been paid. So here we have balance due. What is the balance due? 12 minus 10, it's 2 lakhs, right? And here what is the balance due? 10 minus 5, 5 lakh, 10 minus 5, 5 lakh, and this 5 lakh continues. Okay, so now all the partners are exactly in their capital sharing ratio because the capitals are equal. Their profit sharing ratio is also 1:1. So now whatever is the balance, that can be distributed equally. So I'll say item S, less payment to all partners equally. So this 2 lakh will get paid, and how it will get paid? It's going to be 2 lakh multiplied by 1 divided by 3. So this is going to be the proportion in which it is going to get paid. So now we have to arrive at the balance due once again. Let's see. So here 2 lakh minus 2 lakh fully paid. I'm sorry, 2 lakh minus 2 lakhs fully paid, but here still we have a balance, here also and here also. Then I think we have fourth payment. So there is a fourth payment, and whatever that comes, that can be distributed equally, and the payment is 30 lakhs, right? So fourth payment is, what is the amount? It is 30 lakhs, and the 30 lakhs can be distributed. So I'll say less payment to all partners equally, and this 30 lakhs will get paid. And how it will get paid? It's going to be 30 lakhs into 1 divided by 3. So this 10 lakhs will get paid because all of them are in equal proportion. So item W, what is the balance due again? Let's see. It's 30 lakhs minus 30 lakhs, 0. But here we see some difference. What is happening? The amount that is due is 4 lakh 33, but what is paid is 10 lakhs, and they are having some negative numbers. So now how I'm going to look at it is, this is the additional money that is going to the pockets of partners. So that's for L, this is also for M, and this is also for S. But this is not something which is negative in nature, because it's an additional money which is going. So it's actually the profit that is made by the firm by realizing the assets, so we can call it as realization profit. Okay, so balance due, and it is realization profit. Now from the firm side, yes, they have an obligation. See, so far they had an obligation to pay 4 lakh 33. Now this 30 lakhs also got distributed. Okay, so what is happening here is, after paying this 10 lakh, they are getting, or with the payment of 10 lakhs, they are getting 5 lakh 66,667 additional, and that's because of realization profit. Now this is the effect in the, say, fourth payment. Now there is also going to be a fifth installment, right? What is the fifth installment? Again, it is 30,000. So let's capture that also. So I'm just going to do the copy paste. Fifth payment or fifth installment, whatever we call, it's 30 lakhs, and this is going to be paid, so less payment to all partners equally, and how much? 30 lakhs will get distributed, and let's see what will happen, and we land at the same calculation, right? It's going to be this 30 lakhs into 1 by 3, the same 10 lakh will go. So what is the ultimate amount? See, already there is a realization profit of so much. Now this is also getting added, so all put together is going to be the realization profit that will be created to partners capital account. And thanks, I've come to the last alphabet as well. Luckily it's not extending further, so realization profit credited to partners capital account. How much? Probably I would like to sum them. I don't want to show them as a negative number, basically because it is created to the partners capital account. Okay, so what we'll do, I'll just sum this. So this is what getting created to the partners capital account. Now let me try to avoid this minus sign. Probably let's see what will happen if I put a minus sign here. Yes, so this is what payable by the firm to the partners, because the firm has made realization profit. So in this way we have prepared this comprehensive statement where we have made the distribution of cash of all the installments, first, second, third, fourth, fifth, and what happened is the first installment have been used for settling the creditors and bank loan in their lending or borrowed ratio itself. Then second installment, the amount was distributed first to them, then second portion to else loan, then the third one we had this 2 lakh, and that 2 lakh was distributed in this pattern, that is 5 lakh. So out of 5 lakh, 2 lakh has been settled first here, then in the next installment 15 lakh realized, of which 3 lakh has been settled first, then in the next installment, or in the same installment, there was a balance of 12 lakh. Okay, and in that also L and M had excess capital that was settled first, and then the balance 2 lakh was distributed amongst all the partners because the capital have become equal, so that was distributed equally in this proportion, right? Then whatever the amount that was collected, that was getting credited to the partners capital account, and we reached the stage where the partners started enjoying realization profit. So here we can see the realization profit, and fifth payment absolutely turned out to be realization profit. And question also hints somewhere, yes, there is going to be a lot of money, because somewhere it is mentioned that their assets includes valuable land and building, so no loss is expected, and that's what we are watching here. They have realization profit, and that were created to partners capital account.